All right, guys, let's do something real quick here. So, welcome to yet another class or another section of the class. So, and in this section, we are going to be discussing uh, one of the one of the very crucial aspect of you know trading. One of the very crucial aspect of trading, and this section is 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 termed concept of liquidity, or we say liquidity concept. So it is very, very, very crucial. That is why we need to discuss it, and I need to make you understand what liquidity is. So what is liquidity first? So in my own simplest definition, I would say liquidity is money. Liquidity is just money. Liquidity is equal to money. So, and yeah, this is it. Liquidity is money. Why did I say liquidity is money? It's because it is what drives the market. So liquidity is just like a fuel that moves the market. It is what the market needs to move to make all of those movements that you are seeing on the chart. It is liquidity and it is money. So there needs to be enough money to move the market. You understand? So, and funny enough, uh, um, some of us, or should I say, some of the traders who don't understand this concept, terms to serve as the liquidity, because there is this popular saying in the forex industry that if you don't know how to identify this liquidity, then you are the liquidity. You understand? So you'll be contributing money to move the markets and you will not get anything in return. You understand? So, and the purpose of trading is for everyone to actually profit something. You understand? At the end of the day, is for you to be profitable, make something out of the market. So I'm going to be, talking about liquidity as in three in one liquidity concept. That's what I'll be discussing with you. Three-in-one liquidity concept and how to validate them. Sorry, let me. Three-in-one liquidity concept. Three-in-one liquidity. So in a setup that you are going to be trading, you are going to be looking for three liquidities. You understand? Three forms of liquidity. So, and the first among the first type, let me bring this here, or let's just arrange them on top of below each other. So you are going to be looking for three liquidities, right? I said three liquidities. So first liquidity is the one liquidity sweep. The first one is liquidity sweep. That's I'll explain that. Then the second one is transactional liquidity. Transactional liquidity, transactional LQ. Then the third one is structural liquidity. Sorry, what is happening here? Oh. Sorry. So transactional LQ. Then third is the structural LQ. Oh god, what is happening now? What is happening? Excuse me. So structural LQ, structural liquidity, structural liquidity. So yeah, these are the three liquidity we are going to be looking for while trading our patterns. You understand those two, type 1 and type 2 pattern I gave you. These are the three liquidities that we are going to be using to validate them, and also other criteria that you have to look into to validate them as well. So now let's get started. Now I am going to draw out our pattern. The pattern I said we trade in our academy. So remember I say you have something like this, then a sweep of liquidity, then a break of structure, then you have a little pullback, then these and these. So our three liquidities are in this setup. They are in this pattern. So starting from the first one, liquidity sweep, right? Liquidity sweep is basically when this move here, this high clears this high here. So this particular area is termed as a failed order block. So it's actually an order block that is supposed to hold price to the downside, but this move here took it out, so that is why we term it liquidity sweep. So let me adjust this up a little. So that is why we termed it liquidity sweep. So that was the first one, sweep of liquidity. Then after a sweep of liquidity, you are definitely going to get first break of structure. BOS. First break. Then after that first break, what led to this first break is transactional liquidity. It is this move, this low here, that created that sweep of liquidity that is termed as transactional liquidity. So it is the one that caused the first break of structure. Then our structural liquidity, this is it here. You understand? After the first break of structure, that's where we get our structural liquidity. Look at it here. Let me indicate STRTLQ, structural liquidity. Then this is our, remember this BOS here, this is our transactional liquidity, so I don't need to indicate it. So then we have, after structural liquidity is there intact, then we have our second break of structure, BOS. So after the second break of structure, now your setup is, now this is LQ sweep. So you can see everything is now intact here. So remember, this is our type 1 setup, so you look for the same thing in the type 2 setup. Make sure everything aligns this way. Then the moment you get your liquidity sweep, I said you consider this order block here as your valid order block, your high probability order block. So you're expecting price to come all the way in here, then you are going to place your position to here, or you set your limit order here. Right above here, then you target the lowest low created before price move up to your point of interest. That's the order block, the valid order block up there. Then you are looking to sell. That's in the case of a bearish market scenario. So if it is bullish, then it's going to be inverted the other way around. It's going to be inverted the other way around. So that is just basically it. Then for the type 2, you already know what to do. You look for the same thing. I don't want this video to get too long. So but type 2, you know how to, I've already showed you on the lower time frame set and entry setups, how you get these setups. So now let's talk about a few other things that validate this setup. You understand? So you see this transactional liquidity. First is sweep of liquidity, first break of structure, second break of structure. But you see this transactional liquidity, when you use your fib2 or your GAN box, it should give you this transactional liquidity. You draw from this. Let me keep it. You see, from the leg that swept liquidity, this leg here that swept liquidity, and the leg of the leg that came to break first structure, this leg here. So you pick your fib2 and draw all the way down here and check. You see, this is the 50% level. This red line here is the 50% level. Is your structural liquidity up to 50% or above 50%? That's in the bearish case scenario. In the bearish market, is it up to 50% or above it, or more than 50%? So if it is up to, then you are good to go. But if you find out that, okay, your structural liquidity is it's not up to 50%, it's just very close to 50% like this, that structural liquidity isn't a valid one. So your POI is not considered valid. You understand? You might be waiting for price to come and tag you in, but it will most likely not come. Most of the times, it's either it comes and hit your SL and go the other direction, or does something else different. So your structural liquidity must be very close to your POI. It must be the highest high or the lowest low created very close to your POI like this. Then it must be within, it must be at least at 50% level or above 50% level, or below in the bullish market scenario. So that is what validates, that's the criteria that validate your pattern here, this pattern. That's what makes this setup a valid setup. You understand? So now I want to also share with you the implication of not understanding this liquidity. So if you don't understand liquidity now, we are we are familiar with the saying that every other block price reacts to every other block. You understand? So every other block created, so price will definitely, whenever price gets to an order block, it will react until when it finally makes its final decision and move to whatsoever direction. So now if you don't have the knowledge of liquidity, now you, as someone that does not have the knowledge of liquidity, you'll be looking to take your trade here at this point here, this order block, because you believe it's an order block, right? So now if you are to take your entry from here, price will most of the time take you out before moving to your direction. You see, your SL will be above here, and you'll be expecting price to come and tag you in, then sell to the downside. So in this case, price will come, react, and probably you might get a little movement, then it will come back and take you out. Then those pick the orders of those that understands liquidity, and dump to the downside. So that is just the implication. So understanding liquidity will save you all of these losses. And that is why I say some of us that doesn't understand liquidity are the liquidity, because your stop loss here that you use here is what is going to add to what will fuel the main movement to the downside. You understand? When they clear you, plus the stop loss is generated by all these institutional and larger institutional companies, the commercial banks, and the hedge funds. They also generate their own liquidity. So you now contribute to their liquidity, and that's what they want. You understand? They know where you keep your SLs, so they are always seeking your SLs, so that they will take advantage of the market ahead of you. You understand? So if you are not smart enough, you will be the liquidity. If you can't spot the liquidity, then you are the liquidity. So now, without wasting much of our time, let's get into the chart and see what we can do. We are going to be looking for, we already remember this setup, this pair, this is volatility 10s, and we have a bias at around here. You see, we have a bias. This is 24 hours, this is daily time frame. We have a higher time frame bias, and we are trading V10s long term up until this level here, this line here. So what you do from here now is move down to your lower time frame, which is, let's say, 10 minutes time frame, and you locate this area where price tap on our higher time frame POI, this point here where price tapped on our higher time frame POI. So you will now be looking for that same pattern I told you about, that particular pattern that we trade, that that's what you start looking for here. So sorry, I think I forgot to say something. One other criteria that validates, or should I say that invalidates, sorry, I'm coming. Let's go back to 24 hours time frame, 24 hours. So one other criteria you need to look at before picking your structure, your POI, is this structural liquidity must not be at the same level. You understand? It must not be, sorry, let me give you another illustration here. So you have your sweep, then a break, then your structural liquidity shouldn't be at the same level as where price swept your liquidity. You see something like this is invalid setup. You understand? When you have your structural liquidity at around this level, it is not your POI will most likely not hold. You understand? Here is what I'm saying. You see, let me draw a line on top of them so you can see they are at the same level, so this is an invalid setup. You understand? It will not hold, believe you me. Even if it holds, then probably you were just able to escape the whole thing. So but most of the time it doesn't hold. If you have your structural liquidity aligning with where the first sweep of liquidity happens, your setup is invalid. So now let's go back to 10 minutes time frame. Oh, sorry. Let's go back to 10 minutes time frame. 10 minutes. 10 minutes time frame. So now when we go back to 10 minutes time frame, what we are going to be looking for is, to trade the market, to start looking for entries. That's when you start looking for your money. That's when you start looking for money in the market. You understand? So you just, after you frame the buyers, remember I said after you frame the buyers, all you have to do every day on the chart is just come on in on the chart and start to look for possible trade opportunities. That pattern I drew for you, start looking for them here to see if you see them. So you can see we would have considered here a valid point of interest, but you can see that the point at which price swept liquidity and the point at which we have our structural liquidity, they are at the same level, so invalid. So do we have a setup here? This is actually a setup here. This is an A plus setup. Look at the sweep of liquidity. No matter how little the sweep of liquidity is, just consider it. Price doesn't care about, okay, there should just be a sweep of liquidity. Your point of interest should sweep liquidity. Then you have your structural liquidity here. Sorry, you have your structural liquidity at this level. This is our structural liquidity. Then we have our second break of structure. We have our second break of structure. You can see this is an A plus setup. Then you just take the wicks here, this last week here, and draw it out. And I think this is a missed entry. Price didn't even take out the liquidity at all. Price didn't take out the liquidity, so we are off this one. Let's see if we can be able to spot another setup. Any other setup here? Do we have a setup? No, I don't think we have any here. No setup, nil setup. So remember I say if your overall bias is bearish, you sell, you continue to sell. Don't look for buys. Even if market give you the opportunity to buy, please try as much as possible to avoid it. So this isn't so valid. So price went to react from a POI above. Let's see where price reacted from. I think my eyes didn't see that. So I think, okay, price came for this point of interest here. Oh, why didn't I see this point of interest, this sweep of liquidity, a break of structure. Oh, I think I had this setup. So I had it. I though I didn't execute because my account wasn't funded as at that moment. So this is what you get. Everything, this is kind of A plus, but when price came, it actually took us out on SL before moving. So you can see this is how you continue to scout for setups. This setup will definitely take everyone out before moving. You can see, because your SL, you can't leave your SL above, because so you want to keep your SL at around this level. And definitely you can see it's cleared the SL before moving to the downside. So you'll be targeting the lowest low created before price approach your point of interest. So that's actually an SL. It is normal in the market to grab some SLs, some losses. So if it's just about winning, everyone will be making money in the market. So sometimes you win, sometimes you lose. So no one out there deceive you. So now we have another setup here. This sweep isn't so valid, but the internal sweep is valid. Then we have our breakup structure here, or we can take this as our breakup structure, this here as our first breakup structure. So if we are to consider this as our structural liquidity, I will say it is invalid. Remember what I said, it must be within 50% of your fib level, your fib2 level. You understand? And that structural liquidity is not up to 50%. Look at the red line there, it's not up to. So we'll now look for another liquidity that is the highest high closest to our point of interest. Where is our point of interest? This is our point of interest. We are looking to trade off this level. You understand? Take everything from behind. So the type of liquidity that market gave here is the type that I've not talked about. It is called engineered liquidity, but don't worry, I will make a video on that separately. So it's engineered liquidity. I only trade structural liquidity, so that is why this trade, I think I didn't take it. You understand? But I saw the setup, though I didn't take it because the liquidity is engineered and I am not used to trading engineered liquidity. So that was why. So this will have been a very clean, good trade. Sniper entry, starting from this point, your SL slightly above, then you are looking to target the lowest low created before price approach your point of interest. And you can see this is a clean 5.1 RR. 5.1 RR simply means you are risking if you are risking $1, you are getting $5.1 off that trade. So do your mathematics with the rest. So we have another setup here after price tapped, sweep of liquidity. These type 1 setup, first breakup structure, then structural liquidity. This one we don't even need to tell you that this structural liquidity is within 50% level. You understand? So this is very valid. Then we have our second breakup structure. Then what next? You mark out your point of interest, this last bullish candle before price push to the downside, and you are looking to take your trade from here. But you can see this was a miss. Actually, this was a miss, though I still have this POI valid. I have like 2 points of interest here. Price gave us another setup. This volatility 10s has been playing with my head throughout this week. It has been playing with my head, just moving, giving me false signals. So we have another sweep of liquidity here. We have another sweep. So that is why I say I have 2 setups on this sweep of liquidity. This is another a type 1 setup here. First break, then structural liquidity, then we have our second break here. This is our second break of structure. So this is another POI. So the one that I'm anticipating that is going to hold is this second one, this particular one I am on right now. So we have 2 points of interest here, so waiting for price to come react to them. So price will either come for one of them. So it's either price come up here, respect this and dump, or it will violate this and work with this and dump. So we are having 2 cases here, but I am more sure of the most recent one, the most recent point of interest created. So that's where I'm expecting price to. This is where I'm expecting price to react from, then dump to the downside. So I think that will be all for this particular section of the class. I will do more of these videos just to aid your understanding on how to pick your entries after framing a bias. How to pick your entries, you understand? How to pick your entries is very, very, very important, and how to stick to your plans, your trading plans, you understand? Very important. So I think I'll have to end the video here. I'll see you in the next one.